We are glad to be going live today. Going live, going live, going live. We are excited to be sharing this information with you on today. And I'm excited to do it. We're waiting a few minutes just to get some more individuals that will get a chance to come on as this live is slated to begin officially in 6 minutes. But I'm here just a little bit early at the very beginning on the first day that I'm doing this. As you may view this live stream after we have finished or completed the live, I want you to know it is my absolute pleasure here on this channel to serve you in this capacity. One of the things that we're doing here, the reason why I'm beginning to do some of these lives, is that we are in a year of tremendous volatility. And with all the volatility that we are going to be experiencing, I just think it's very, very important. I can come on and talk about a lot of stuff. I teach classes in this particular realm to help people. I'm one who does not believe that you can build wealth simply by investing in the stock market. So as I come on and talk about stock investing and stocks, which I'll do a review of stocks and things today, as you notice in the title for this live, it also says that we want to help you build, live, and sustain wealth. That's really what I'm all about. So I can't talk about investing and not talk about bad debt. I can't talk about bad debt and not talk about getting your credit straight. So we're looking at a well-rounded view of life so that you literally have things in place as they should be in place. So this is very, very important for you if you are going to be successful in the markets, if you're going to be successful in life, if you're going to be successful, this is going to be important to do. And for that purpose, I'm very, very extremely excited to have the opportunity to share these things with you. Now, in this first live that is going to be launching, people prepared for 3 minutes from now for it to launch, but I wanted to start early to just lay some foundation groundwork for some things that I'm doing in this. We're just going to be going over what's happening in the markets right now as I'm recording this live at 3 p.m. Eastern Standard Time. So the markets are about an hour away from closing. Now we know you can still do after hours stuff if you have a webull or other places, but the official closing of the markets is about an hour away. And we're going to be looking at what's going on, what's happened, how do we prepare, set things up for tomorrow. How do we understand certain things? And I'm going to be looking at different things on different days. It just depends on what's going on, but kind of helping you understand and navigate your way through this market. So I'm very, very excited to do it. I know as I'm here on YouTube, our channel certainly is extremely new. We had to repoint it, and so very extremely new here for these purposes on YouTube. But I'm excited. If I help one person build, live, and sustain wealth, then I'm doing exactly what I was born to do. So this is a good thing. I'm excited about it. I'm excited to have you be along on the journey. We want to get some people with us, and so I'm going to just check in as well and just see what's going on with us to make sure that we're coming across well here as well. And as this is the first time that we are doing this, I want to make sure that everything is going good for us here on this live, and I'm excited about it. So let's just see if we get some more people, some people to come in to this as we are nearing that time for us to do what we must do on today. And so it's exciting. It's very exciting for me. Very exciting for me. Let's see. Let's see. Yeah. Okay. Everything is working good. And that's the way we want things to be for us here. All right. That's exciting. Okay. Well, we're going to begin talking about some things that are going on in the markets on today. This has been and is shaping up to be one of the most volatile first 2 months in an absolute long time, and maybe more volatile than a lot of people have ever seen. And so that volatility creates a lot of challenges and issues and problems as we look into these markets. Now, what I want to do first and foremost, I want to go and look at what's going on currently in the market as we are about an hour away from the market close. And so as we are about an hour away, there are some things going on that I really know you're going to want to be aware of. So the Dow Jones is up $220, and well, it's just shifting 222.49 right now, 0.63% up for the day as of the time that we are recording. Now we go back 5 days, we can see that we're down 0.13% in the last 5 days. And when we go year to date on this, well, we're getting locked up here. Year to date, we're down 3.49% on the Dow Jones year to date. That's not what we want to see. The S&P 500, when we look at today, the S&P 500 is sitting at 0.31% positive, or 1385 right now. That's a good thing. The NASDAQ is up 0.57%, or 8036 for a day. And this NASDAQ, where most of the tech growth companies are sitting, if we go year to date for that, it's down 10.95%. Now, I want you to understand why that is. One of the reasons why you're going to see the NASDAQ down right now is because it is clearly known when interest rates are going up, you can expect to see your tech, your growth companies suffering. One of the reasons they're going to struggle, is because when interest rates go up, the cost of goods sold are going to go up for companies who have to borrow money. Typically, your growth companies, in order to keep up with the demand, they have to borrow money. And because they need money faster than other sectors may need it, it's going to cause people to say, well, if cost of goods are going to increase for these companies in the coming months, I'm going to get my profits that I can get out of these companies. So we saw sell-off, really people taking profits and getting out of overvalued companies, which in many cases, you're going to find your tech stocks, your growth companies, a lot of times are overvalued. Next, we got that Russell 2000. If you don't know what the Russell 2000 is, the Russell 2000 comes from the Russell 3000. It is the 2,000 smallest companies in the Russell 3000. And so from the Russell 2000, we can get an idea of what's going on with small cap to mid cap companies in the world, in the trade in the U.S. markets. And so year to date, we're down 10.57% there as well. That's not a great number. Now you'll notice if we look at the Dow Jones and we go year to date, we're seeing 3.49%. Now these are the top 30 Dow companies. These are big companies. But as we get into the NASDAQ, as you saw this earlier, and we go year to date, we're 10.94. And the Russell, when we go year to date, we are 10.57 down. So you can see where a big impact is happening on these companies that, number one, are tech growth companies and small caps. There's big struggle going on there. Let's talk a little bit about what's going to happen in the market this week and what we can expect, what's happening. And so I want to look at that real quick. And what we can see is that there's been a sell-off, okay? So the consumer price index will be closely watched on Thursday, and this is important, and is likely to show another multi-decade high print on inflation. That's not going to be good. A reading that could prompt the Fed to assert the more hawkish stance it has taken on. Economists expect a headline CPI print of 7.3% in January over last year, which would mark the fastest rise since 1982, according to consensus estimates compiled by Bloomberg. Now, let me just tell you, if that pans out to be true, it's going to have an impact. Because if it shows that that number is 7.3% or anywhere near that, the idea that the Fed will be hawkish, which means they will move to bring inflation in check by raising interest rates, maybe more than 0.25 basis points. They may go to 0.5. That's going to have an effect. So let's just keep looking at some of the things that is said. It says Bank of America said in a note out Monday that more downside in equities is likely, at least according to history. So historically, when you see this kind of stuff happen, you can expect to see things dropping. So we've seen some correction in various places and things that have happened. And so we can expect to continue to see this type of correction happening if things remain this way as they are right now. So there's something that I want you to see. Now I want to move over to Wall Mine because today, and I'm going to update this to make sure I'm getting the most up-to-date information. This is where we stand right now. Right now, advancers are 60% and decliners are 36%. That's good. We've got 3,469 of the S&P 500. We've got 3,469 advancing, 2,098 declining. These are stock market stocks in view. We've got that many advancing and declining. We've got 99 who've hit new highs, 65 who've hit new lows. And but we're seeing a lot of these companies still below their 50-day moving average. 63% are below their 50-day moving average. 32% are above it. 63% are below their 200-day moving average. 34% are above it. Now, I want to say this to you, that for a lot of people like myself, one of the indicators for a good entry point for a company is the 200-day, not SMA, but the exponential moving average. So I will look and compare the SMA to the EMA to see how close they are. Usually they're pretty close. And to see with this many, 63% below their 200-day SMA, it tells me that we could be seeing good entry points for companies right now or very soon. These are good things to pay attention to. Now, I want to come down and look at what's going on by sector for just a moment. And if we look at by sector right now, we see three sectors are negative for the day. The energy sector is down 2%. Miscellaneous is down 0.65%. And real estate is down 0.49%. Now, from there, you're going to see utilities is up. Technology is up, in spite of the fact that typically it suffers with this kind of information that's coming out. It's up a little today. Healthcare is up. Consumer staples, consumer services, industrials, finance, materials, and consumer discretionary. They're all posting positives. Now, one of the things you're going to learn with me as we go through these days of live, you're going to notice that I love to look at what I call the heat map. The heat map gives us a picture of the S&P 500, and it shows us what's going on right now. I'll explain to you real quickly what this heat map says, and you'll know this for future videos. Number one, when this heat map is showing you a company like Apple that's green, the brighter the green, the higher the stock went up on the day. The darker the green, the lower it's gone up. So the darker we go, the less of an increase. Now let's look at red. The red, the brighter the red, the more the company has dropped on the day. The lighter the red, the less of the drop. So when we look here today, we'll check a couple things out because I want to look at them specifically. We look at Wells Fargo. Wells Fargo is up 2.24% on the day. And then you can compare it to a JP Morgan Chase, which is up 1.33. You can see the differences in color of green. As Apple and AMD, you can see the differences in color of green. Now, one of the things that I'm recognizing today that we're noticing is Facebook. I'm going to click it because I want us to look at the chart specifically for what's going on with Facebook. It's not good data right now coming out on Facebook. Today we're down 3.53%. 5 days we're down 32.83%. And for the month we're down 34%. 3 months is down 36%. 6 months is down 40%. There is clearly a problem going on with what's happening here at Facebook. Now, there is something that I do want to take note of, and it is the PEG for Facebook. It is 0.83. When you see a PEG under 1, it tells you that the company has been oversold. And so we should pay attention to that. You can also see the same thing in the RSI, which is 22.67, saying it is oversold. Now, typically, when you see oversold, you can expect a turnaround. But because Facebook, Meta Platforms, is facing so much negative criticism, they've been consistently seeing decrease. However, I'm just telling you, based upon the numbers say that this is a great time to invest. If you like Meta Platforms and what they stand for and where they're trying to go with the metaverse, this is a perfect time according to the PEG, according to the RSI. And when I look at the profit margin and I look at the gross margin, I see things that show me that the company is also retaining good portions of income and revenue from what they do, mostly in advertising. So this is what's going on with Facebook. I find it to be quite interesting. There are other companies on here that we can see some interesting things happen, and I just like to periodically give you a chance to look at them. Pfizer, which has had just an up and down. This whole healthcare pharmaceuticals has had an up and down time. We're seeing Pfizer go down 3.33% on the day. Tesla is up today 1.53%. I'm going to click on the Tesla chart just to see what's going on here with Tesla on the day. And what we can see happening here with Tesla, again, it's up 1.63 today. On the 5 days, it's up 1.83. For 1 month, though, it's down 10.19%. And so we're seeing volatility. The RSI is at 43.3. And I talk about the PEG. This one is 2.1. So it is not in oversold territory, overbought territory instead. So there's a lot of activity going on with Tesla right now that we're keeping an eye on. Personally, I'm keeping an eye on it because I invest in Tesla and I believe in that company as far as it being a leader in the technology that it is in. So we're seeing Tesla do well. As a matter of fact, in consumer discretionary, only GM and Ford are in the negative on the day. So we're seeing something happen here pretty big in consumer discretionary, which is having a tremendously positive day. Now, there's a big discussion going on right now. Will Apple or Amazon purchase Peloton? Peloton has ousted the CEO, put in a new CEO, which has been positive. But there's a thought out there that Apple can't afford to let Amazon get Peloton. So we're going to be watching this to see what is going to happen with Peloton over the next several weeks to see whether or not either one of these two steps up. But we've also heard that Nike, which is down today, also may have interest. And all of these are in this same consumer discretionary area, but they're all looking at Peloton. And I believe for branding purposes and what they could do by adding this type of a product to their current mix. And so we're seeing a lot of things happening there. What's happening in crypto? as we are here live, what's going on with crypto. And what we can see with Bitcoin is at 43,000 in the last 1 hour. It's up 0.4%. Ethereum has made it over 3,000, and it's just been back and forth with this 3,000 number over the last several days. I'm a big player in Ethereum and Solana. Solana is up 110.70 to 110.70, but again, it's been back and forth in the last week, and so we're keeping our eyes. Now, I want you to understand something as it relates to crypto. There was a time in thought that crypto stood on its own. But I want to tell you, if you're watching this channel, crypto is highly connected to other equities. What's happening now, as people are feeling a drag on growth stocks and they're selling them, it makes them feel the same way about what's going on with Bitcoin. So you're finding people asserting in their thinking, I believe, through FUD, is that there's not going to be as much money in the hands of people that they want to use to invest in additional type things, more risky type investments. So I think people, as they are getting rid of some of these growth stocks, they've sold off as well a lot of their crypto and kind of gotten out of crypto. Crypto's now down to 2.05 trillion market cap. There was a time that it was over 3 trillion market cap, and so it's interesting to see. I mean, it was closer to 3 trillion market cap, but it's down 3.3% in the last 24 hours. It's just not where you would want to see cryptocurrency be. I believe cryptocurrency is going to do well because I believe in metaverse, which is Web3. I believe there are clear crypto that's going to do great with metaverse. Ethereum, I believe, is going to do great with metaverse. I strongly believe Solana is going to do great with metaverse, and others as well. Sandbox is going to do well with metaverse, and I talk about Hex. There's companies that have positioned themselves properly to come through what we're dealing with. But if you believe that crypto is going to go without regulation, I believe you're being deceived, because the banking industry around the world is one of the most powerful instruments in the hands or connected to governments. So I cannot see regulation totally not happening in the realm of crypto. So there's going to be some regulation, especially we're going to see some regulation in stable coins happening in many countries. I believe first they're going to be doing stable coin regulations, and then we're going to see what happens with full board cryptocurrencies like Bitcoin and Ethereum, things of that nature. So we're going to keep our eye on it, because I believe there's some things there that we must keep our eye on if we're going to be smart. Now, I want to just talk about a ETF for a moment that I'm very big on, and that is SMH. It's the VanEck Vectors Semiconductor ETF. I'm very, very bullish on this as we are coming out of COVID, and we are coming through everything that is happening. I'm bullish on this ETF. There are people who have individual investments in semiconductor companies, and as you can see today, we're up 1.75%, or $4.78. Now, this has been a tough year for everything. We're down 1.74 in 5 days. For the month, we're down 5.21. Year to date, we're down 10%. But when we go back a year, it's 16.93. I believe that as we come through COVID, and as we begin to see these semiconductor companies get these chips manufactured and are able to get these chips, they're also building plants in various countries right now. We're going to see things shift. Now, when you look at the holdings, there's 26 holdings in this particular ETF. The largest is a Taiwan Semiconductor Manufacturing Company. The 11% of what's in this is invested in that company. NVIDIA 8.91, Broadcom 5.72, Qualcomm 5.60, Intel 5.29, Texas Instruments 4.98, and then we've got AMD, Micron, AMSL, and Analog Devices rounding out the top 10. I'm very, very bullish on it. If you invest in it, You get a dividend. It's not a huge dividend, but you do get a dividend of $1.57 a share. That's a very solid thing. But it's just the fact that I see tremendous upside for a while still. You hear different people looking at it different ways, but I'm telling you, there's not one company that's going to come out of this chip issue ahead or so far ahead of all the others and going to do so much better. But there's going to be a movement in all of the companies that are doing this across the board. And that's one of the reasons why I'm very bullish on this particular ETF. There's another ETF that I'm heavily invested in, and I'm very bullish on it as well. It is VGT, is the Vanguard Information Technology ETF. Now, understand, I get that technology, a lot of these stocks are going to have a hard time a lot of the technology sector is going to have a hard time once these interest rates happen. But I'm very interested in this because I see where its holdings are. It's got 365 holdings. 21% is in Apple, 17% is in Microsoft, and then we've got Nvidia, Visa, MasterCard, Broadcom, Adobe, Cisco, Accenture, and Salesforce. Because of the diversification of the top 10 holdings that I'm seeing in the way that I see it, I am very bullish on this particular ETF. You're going to get a dividend as well as the 365. The dividend is $2.92 a share, as well as the 365 companies spread out that you're going to be getting in. This is going to be phenomenal. Now, how do I do my portfolio? I do it. You hear other people that are wise investors use this same format. I have 4 ETFs that are the foundation for my portfolio. The 2 that I've just mentioned to you, along with VOO, which I'm the most bullish on. It's up $3.16 on the day, but this one mimics the S&P 500. There's 510 holdings in there. Apple, Microsoft, Amazon, Alphabet, Tesla, Alphabet, again, Meta Platforms, Nvidia, Berkshire Hathaway, United Health Group are the top 10 here. I'm very bullish on this. You're going to get a dividend as well. And then my last one is VTI, which is the total stock market, Vanguard total stock market. And even on a day like today, it's up $1.97. We've got advancers leading decliners. Here, you get 4,143 holdings. And you can see these names that I named, the top 10 are the top 10 here. But again, it's the 4,000 companies. So I'm balancing myself properly by having the 4,000. I've got the 510, I've got the 365, and I've got the 26 companies, and I'm spreading myself. That's my foundation. On top of that foundation, I put the companies like Apple. Matter of fact, I'll come right over here so you can look at my webull and see. I've got my top 4 here, and then we've got Apple, we've got Microsoft, McDonald's, which we've had since 1996, Tesla, AMD, Goldman Sachs, Square, which I believe in long term. It's going to have some bumps to get there, but I believe in it long term. Those are my foundation plays that I have, that I use in my portfolio. So I'm saying to you that we're doing okay here in this market. We are not dying. I understand that this is a difficult time in the market. There's a lot of volatility in this market right now, and there's a lot more yet to come. But I want you to understand Thursday is going to be a very critical day. As the word comes down and we get to find out what the CPI number is for January, that I believe is going to tell us what we can expect of the Fed when they meet in March. We can expect them to be more hawkish. If that number is around 7.2, 7.3, 7.4, they're going to be more hawkish, I believe. And I believe what that looks like is it looks like they could then maybe, instead of just raising it up to 0.25 basis, they could go up 0.5. And so we're going to look to see what's going on with this as we approach Thursday, when this happens, when that number comes out in the morning, we're going to see what's going to happen in the market. Now, you can expect, if that number is around 7.2, 7.3, you can expect that we probably are going to see a drop in the markets on that day as a response to what the CPI number is. So don't be surprised. Because there is a baking in that is happening right now as we're starting to come to a realization of what we can expect in the markets at this time. Well, I've been excited to come in and not do an edited recording, but to come in and talk live as far as what is happening in the markets, as far as what we can expect this coming week and what we're doing right now. I hope that as you view this, this is something that inspires you to get involved. Listen, again, I'm here to help you build, live, and sustain wealth. You cannot do it unless you get fully invested in getting out of bad debt, using good debt to build wealth, getting your credit scores established with credit scores of 750 or above. And then beyond that, you've got to get yourself involved in investing, whether that's stocks, bonds, crypto, real estate, artwork, music, your own business. You've got to get involved. This is how we win the game. Well, it's been my absolute pleasure to share this with you on today. I'm going to be doing these live as we're building the channel. It gives me an opportunity to share what I'm believing, what I'm seeing in these markets, and the direction I believe things are going. Have an absolutely great day. I look forward to talking to you again real soon. Be blessed.